What's going on? This video, we're gonna be talking about ETFs, exchange traded funds. Term gets thrown out a lot. ETF have mutual funds that kind of get commingled together. The main thing we're gonna be going over in this video is how to see what the actual ETFs own a really easy way, seeing what the underlying assets are of these ETFs, especially regarding VOO VOO index fund that tracks the S&P 500, and VTI, the Vanguard Total Stock Market Index Fund. Both do similar things, but one is focused on the S&P 500 and the other is on the overall market. These are two of the most popular ETFs. Before we get too much into breaking these two down, and also kind of just generally where we go to investigate these ETFs, let's just quickly describe what an ETF is. As I said, it is an exchange traded fund. An ETF usually tracks an index of securities, a lot of times stocks, especially when you're looking at VOO and VTI that I mentioned before. Some of the most well-known ones right here, they talk about SPY. The main differences between them and a mutual fund, if you hear those, or an index fund that you're buying, you kind of hear people use that term interchangeably, but they are different. Mutual funds have one price, you buy them at the end of the day. There's no active trading throughout the day. ETFs are traded much like a regular stock on the stock market that changes in price throughout the day, buy and sell, easy liquidity. They also can contain commodities or bonds. So you have US and also international stock. You can get your portfolio completely diversified this way, or actually there's ETFs that track just specific industries. The main purpose of this video I wanted to discuss was ETF.com. I have a feeling most people have a general idea of what these major ETFs hold and what other ETFs hold. This isn't a sponsor video, but ETF.com is really helpful for being able to look at more information of these ETFs, including the exact breakdown of what these ETFs hold. Theoretically, you could create your own VOO by just copying their stock portfolio percentage allocation. This could really be easily done on M1 Finance. If you never use M1 Finance, awesome app, kind of my secondary account. I've only shown Robinhood on here. Maybe I'll have a link to my current portfolio over there. I actually hold a combination of ETFs and some single stocks. Just look up VOO on here. So once you're here, you can see the breakdown and overview, the efficiency, the tradability, lots of interesting data available. Gives a description of what it does. Got a little fact set. Important things for any ETF that you're looking at. You're obviously going to want to know who is the issuer of the ETF. Vanguard. You have the date of inception. Expense ratio is a really big one that isn't usually available if you're using a company like Robinhood, but is very important because you'll see some of these actively managed ETFs have very high expense ratios. This is very low in comparison to many, especially the ones that are really well performing. Daily volume, you can see competing ETFs, which is going to be ETFs that do have the same goals. You can get nice price charts, a little bit more longer term, 5 years, 11% return annualized, pretty darn good for set it and forget it. But here is the one part that I really want to show it. So there's actually two parts. You can see what the percentage of their portfolio is allocated towards. So top 10 sectors, most of it all right here. And this is where if you wanted to, you could literally plug these numbers into your M1 Finance pie, make it, and now you have literally VOO made up here. Obviously you could just buy VOO, but you could avoid the expense ratio, I guess. Top 10 holdings are automatically listed, makes up a total of 26.78%. You hit view all though, and you can literally see every single stock that they own. You can see why they've been doing so well over time. Their highest positions are very high growth companies that have been very successful. You can see it. I mean, they own a lot of companies. So you can look up VTI real quick, Vanguard Total Stock Market Index. This is the total US stock market. So again, both of these are very similar. People like this one a little bit better, maybe it's a little bit safer. Same expense ratio, not quite as good on the 5-year, but if you look at the 10-year, it's been around longer. See, inception date, much older, has a longer track record. That's a heck of a percentage. 10-year return, 13%. Just buy it and forget about it. Not bad. You can see similarly weighted, and they just gonna own a little bit wider range. It's not gonna be all S&P 500 stocks. A pretty good portfolio. You can't really go too wrong with either. I invest more in VOO mainly because the stock market is pretty top heavy. Generally, you can see it hasn't recovered quite as well as VOO has, although it's not doing bad by any means. Look at VOO year to date with the huge crash occurring. 1.72, 1.43, same expense ratio. So it has performed just a little bit better over the last 5 years, but that really adds up. A little over 0.5% more annualized over 10 years really can compound and generate a lot of extra dough in your portfolio. I pretty much have answered the question, which one is better? Currently, VOO's trading for a higher price, dividend yield of 1.33%. VTI does currently a little higher dividend yield. You can't really go wrong with either. I don't know how many people have seen how easy this is to get this information. You can easily compare, open up a couple windows, take a peek at them. If you'd like to look at SPY versus VOO, you're looking at almost the same returns, except a little higher expense ratio. Actually done a little bit better year to date. It has recovered a lot. Another really popular index fund ETF that's going on right now that's catching a lot of fire is QQQ. It's at all-time highs currently. It's a NASDAQ fund. I do own a few shares. It is in my M1 Finance portfolio. 26% return year to date. Over the last 5 years, it's been averaging 19.64%, 20.66% over the last 10 years, a very impressive record. Took a look at their holdings, very heavily weighted in Apple, Microsoft, Amazon, Facebook. Got a good chunk of Tesla, which sure helps. How much they have just ballooned. Netflix has gone through the roof. A lot of these companies have skyrocketed due to people being at home. It's going to be interesting to see what happens with the economy, if people are going back to work, if people are able to travel, or will we continue to have things kind of be locked down. If things partially stay open, these companies should probably still do well, and they probably will do well in the future. We are a technology driven world. People are moving more and more in this direction. So haven't added any QQQ into your portfolio. I maybe consider it. Not actually investment advice, other than this definitely something that I have done and continue to add to this position. If you haven't seen this, obviously it's free to use. Nice, smooth, easy to use website with great information. It allows you to break down some of these ETFs a little bit more, give you some tips on maybe how you should allocate some of your things by following some of the most successful funds. I'm sure if you could guarantee somebody, not that this is a guarantee, but over time it came to somebody saying, hey, I'll get you 20% on your money on average over the last 10 years. Not a whole lot of people out there that would not take that. Hope you enjoyed this video. Hope this was helpful. Let me know in the comments below. Do you invest in ETFs? Are you picking stocks? I do a little bit of both. I'm into all of it. I like growth stocks. I like dividend stocks. I like ETFs. I really am having a lot of fun during this time of extreme volatility, trying to just catch things at the right time. Hope you are too. Good luck out there. Don't get too risky, but have some fun. Make sure you like the video. Subscribe if you haven't already. We are over 20 subscribers now. Woohoo! Thanks for watching. Until next time, peace.